Hello and welcome to the Best Miami Real Estate Podcast. I'm your host, Jennifer Nicole Lee, where we love to connect you with the brightest minds, the boldest investors, and the true visionaries shaping the world of real estate and wealth creation. Today, I'm honored to welcome a powerhouse guest whose experience, insight, and passion for financial freedom truly sets him apart, Mr. Fuquan Bilal, CEO of NNG Capital Fund. Fuquan is a seasoned investor, capital strategist, and educator with over 25 years of experience building wealth through real estate secured alternative assets. He successfully raised more than 50 million in capital, launched multiple funds, and managed a growing portfolio across key US markets, all while mentoring others on how to create lasting generational wealth. What I really admire about Fuquan is his straight talking, experience driven approach. He isn't just about theory, he's about results. His insights on creative deal structures, accredited investor networks, and passive income strategies are game changing for anyone looking to thrive in today's market. So get ready. We're diving deep into the mindset, methods, and money strategies of one of the most dynamic thought leaders in real estate investing today. Fuquan, it's an absolute pleasure to have you here on the show. Welcome to the Best Miami Real Estate Podcast.
Thanks for having me, Jennifer. It's a pleasure.
Wonderful, wonderful. Well, let's jump right in. I know our global audience is really excited to tap into your strategies. And first of all, I just want to ask, um, your origin and your mission. You've been in this business for over 25 years. Can you share how you first got started into real estate and also investing, and what led you to launch NNG in 2012?
What was the different mindset I had at the time working in corporate? And once I realized the power of real estate, I made the transition 26 years ago in 99, actually. So
Wow. Okay.
for me, it's been a journey. It's been a lot of ups and downs. The best thing that I like about real estate is you never get to figure it all out. It's different facets. Whether you're doing anything from the note side of the business, creating private mortgages, whether buying land, buying paper from the bank. Is so many different ways that you can make money in real estate. But I first started in fix and flips doing that.
Nice. Nice. Interesting. That's so great. So impressive. It's great to see that you've been in this for over 26 years, 1998, and that you've only gotten better over the years and also taught so many. My second question is you've raised over 50 million and built funds across multiple markets. But you've also focused heavily on mentoring and teaching. Why is educating others such an important part of your mission?
Well, it's where I come from. So I grew up in a single parent household, low income area. And that's one of the things that give me my feeling of importance, the ability to go back to those communities, revitalize the properties, put them back on the tax roll, and give the residents a better place to live. So that's the same as, empowering those same people with financial literacy because we didn't have that, as we
Yeah.
grew through the ranks. So that's a passion for me. I was actually just talking with my property manager yesterday in a meeting about the concept of complex to community and empowering those residents there with how to fill out a resume, how to go for a job, how to interview, stuff like that. So
Yes.
that's a very one of the pillars of what we stand for, you know.
Absolutely. It's like you found the exit and you started having this amazing success, but you just didn't leave and have your wonderful life. You went back to help others find the way as well by giving them the tools, tips, techniques, and strategies that you've learned along the way. So you're really paying it forward. Very commendable of you. And I think we need more people like that. That is wonderful. Now I want to shift to raising capital and investors. For listeners who want to scale beyond single deals, what are your top strategies for building a network of accredited investors?
So your network is your net worth. That's really
Hmm.
true. Surrounding yourself around those people and building those relationships and just nurturing that relationship is not something where you're going to go into the room and you're going to raise millions of dollars. This thing take time. People got to get to know, like, and trust you in that order. So really setting out to build your track record, walk the talk, and creating those relationships, and people will gravitate towards you, especially if they believe in your mission and your core values. You create those relationships, and they go from there. A lot of referral business you get when you do people right. So that's the secret sauce.
I love that. It's like slow and steady wins the race. You have to really build these relationships, have the rapport, have them say that they can trust you. So many get quick fast scams out there. It's really good that people just take their time, take one step back to get 10 steps ahead, so people can truly see that you're of integrity and you know what you're doing and you're not out just to make a quick buck with commission breath, which is very commendable again. Wonderful. Um, I just want to say you've learned a lot along the way. You mentioned in your intro when you first came on, you had the highs and the lows. So what's the biggest mistake that you've done yourself starting out, and also that you see new investors make when trying to raise capital, and how can they avoid it?
First part of the question I would answer the biggest mistake. I learned that, right after the GFC, the global financial crisis in '08. So for me, it was I was doing a lot of flips. That was my intro into real estate. The big chunks of cash was sexy, more sexier than the $200-300 a month income you make off a rental. I really didn't understand how it appreciates and hold on to it for 10, 20 years. You're gonna leverage the equity. I didn't understand all of that. So I would say that was the biggest mistake I made, just chasing the deals that are really transactional, just the cash on the fix and flip. So um, the second part of the question, I remember it. I know you asked me the biggest, I
Yeah,
guess.
how can they just avoid it? I guess it's the
Oh,
mindset, knowing that you just can't make it overnight. You just have to give it the
correct.
gift of time, right?
Correct. A cash flow is king. That's what I took from that, right? It's if you're doing flips, do two flips and one rental, so you can get one rental a year at a time. And in 10 years, you'll have 10 rentals cash flowing. If you're just getting started, depending on, what part of the real estate business you want to be in.
Oh,
Uh,
very empowering. Absolutely amazing. It's almost like, you talk a lot about generational wealth, and we have similar stories. I was raised on the poverty level, on food stamps, with government assistance. And my mom had her house, but she was working three jobs, single family, single parent family as well. But there's things along the way that you learn and you kind of break the generational, I don't want to say curse, but habits of our parents, because it's not that they didn't want to be wealthier, maybe just didn't know better. They didn't have the tools that we had with the internet and networking and asking questions. It's a whole different ballpark. So how did you, and I know this question wasn't in there, but I'm just going off the cuff here. How did you kind of wake up and say, you know what, I'm going to take control of my financial situation. I'm going to take control of my financial future, and then have it be generational wealth, where, being rich is just having money, but having true wealth is where it works for you. When did that shift happen to you? When did it kind of that wake up call and said, I can actually turn this around and I could be the one that breaks this chain, if you will, in your situation, which I find very exciting.
Yeah, that's actually a fact. I am the person in my family that made the transition and hit, I guess, the $1 million mark first,
Yeah.
and built the business sustainable. So it's a good and a bad. It becomes a weight on your shoulder because now you have to carry the responsibility of the family. The
Mhm.
good part is you can, which we did was started to have like Zoom calls, empower each other on building credit, good books to read, accountability with each other. So that kind of helps with the family dynamic. But for me, the change came when I knew I could have more, right? I knew I can
Mhm.
have more. I know that I had the ability to have my own. And just the hunger and
Mhm.
desire of that kind of led me down my path into where I am today.
Amazing. That's so great. And now your wealth makes money for you and your family seeing it. And also you're mentoring and teaching. And it's so great. The financial literacy is what is needed, because no one really teaches you that in the school systems. And being, an agent myself, I see that also agents really leave this side of real estate out of their portfolio, the investing. I know that this is going to be a
Transactional.
top. Yeah,
Yeah.
exactly, exactly. I know this is going to be a very well watched podcast for all the chunks of wisdom that you're sharing with us. So here's another great question. If someone is just starting out, what's the smartest way to position themselves so serious capital partners really take them seriously?
Well, it's really go back to network that we discussed earlier,
Mhm.
right? Being at the right events, being knowledgeable on what you're working on, right? So if you're just getting started, you have to build some type of track record. So you're either gonna
Mhm.
find a mentor, or you're gonna do an internship, or you just be around that and kind of go over the hill and get the arrows in your back, sort of speak.
Mhm.
So people can see
Mhm.
that you are seasoned, you do
Mhm.
understand what you're talking about, and then you start creating partnerships from there.
Oh, wonderful. So great. Wonderful. All right, let's talk about deal structures and wealth creation. You've been innovative with creative deal structures. Could you share an example of one that generates passive income and also helps to build long term wealth?
The one that generates passive income is one that comes to mind when the market shift in 2022 and interest rates went higher. We
Mm-hmm.
started to look for on the multifamily side, because that's one of the verticals in our fund. We started to look for owners that had the ability to have the loan assumed and structure
Mm,
some deal where we can take over the loan, actually by buying the company and basically taking
nice.
over that company that owns the loan. And that was strategic, especially having a fixed rate at 5.1% when rates were higher. We were able to take that over and work out the difference for a payment. And that was a really good way to structure it, because we just assumed the current debt in place. Nothing really changed with insurance, which is another expensive item in the multifamily market. So that was strategic to help us just transition that over, and that was a win-win for both parties. Um, I guess with
Very
the other one was
impressive.
a challenging one.
Yeah, and then also just to build the long-term wealth, right? So it's just generate the passive income and then also the long-term wealth.
Long-term wealth, correct,
Hmm.
correct,
Yeah,
yep.
great, great, good, good. Well, that's so interesting that you bought actually the bank that gave you the loan. That is really cool. So you locked in that rate. So let me ask you this: how do you balance investor expectations for returns with the need to reinvest and grow the fund? Sometimes maybe you're working with people that have a little bit loftier ideas on the return, and or do you become very selective on who you bring on into your network? Tell us a little bit more about that.
I gotta correct something. We purchased the LLC from the prior owner, not bought it from the bank. I thought
Okay,
I heard you
got
say
it,
we
got
purchased
it.
the LLC. Now, your other question, I believe that that all goes back down to relationships, creating a customer
Hmm.
for life, right? If
Hmm.
you do exactly what you say you're going to do and you nurture that relationships, those investors will continually reinvest with you, especially if it's a
Yes.
good return and they have established track record. Why would they want to go take a risk on something that's unknown when, for 5, 6, 7 years, 10 years, you've been paying them on time? Even when
Right.
things get rough and you communicate, they're still going to stand by you, because by that time, that relationship is already created.
Mm, that's good. That's great. That's great. Wonderful. All right. It's 2025. And in today's 2025 market cycle, what types of deal structures are working best right now in your expertise?
Well, we're doing ground up construction, luxury spec
Hmm.
homes in northern Jersey.
Hmm.
So every market is different. Some things that are
Right.
hot here are not hot in other markets. So I'll speak local to my market. We're doing luxury spec homes that sell anywhere from 1.5 million to 2.5 million. That's the other vertical that we have in the fund. And basically, the profits on those are very large. We pay our investors a pref distribution on that. But we're seeing that work for us because the warranty that it comes with, and people want a new product. We're selling to a lot of business owners, lawyers, doctors. Those are our
Hmm.
avatars for that product. So,
Hmm.
where we are is still good. So that's kind of what we're putting our bets on at the moment.
Absolutely. And you see here, there's so many new developments coming up and a lot of branded high rises that with the licensing deals or even the top luxury brands coming in and working hand in hand with the developers. So you're right. It's interesting to see the different markets and to see what's happening here. And it's really interesting to see what's there in New Jersey as well. All right, let's talk about the market outlook and strategy. Um, in key markets, demand is shifting by neighborhood and property type. How do you evaluate where and what to buy in 2025?
That's a great
What's your
question.
exact
From
elevation?
from
Hmm.
2025 going into 2026, with that luxury spec home vertical we have, we're actually going to bifurcate that and implement another strategy in there, which is still a luxury product, but just quicker turns, like renovating kitchens and bathrooms, but not just Home Depot. Home Depot have good stuff, but you know what I mean, not just the
Right,
general
right,
supplies,
right.
things that people see, the luxury to add that little pill, maybe some small additions and stuff like that to kind of increase the the cycle of getting those deals in and out.
Mhm.
Um,
Nice.
what we've seen is there's a buyer for that product also, because not everybody can afford the new construction. So those are homes that sell between 750 and $1 million mark, and that helps us avoid the new mansion tax that they just actually gave for houses over 1 million. That's
Wow.
we have to pay. It's usually 1% every million. So we
Wow.
pivot a portion of portfolio to that and kind of bifurcate it. We'll get more properties sold quicker because there's easier turns, and that will definitely help out with more liquidity.
Absolutely. Absolutely. So when did the new mansion tax come into effect? Out
That's
of
July of
curiosity.
this year. So for every
Wow.
million, the seller has to pay 1%. It used to be the buyer paid that on their end, but they shifted that over.
Wow.
As well as the
Interesting.
new ruling nationwide where the buyers have to pay for their portion of the commission, the sellers
Mm-hmm.
pay for their portion. So
Mm-hmm.
we're still trying to see how all that is panning out. You know.
It's interesting. Yeah, one thing about real estate, you have to keep your finger on the pulse because things happen, change, and shift overnight, and you got to be ready to adapt. And you have to have that adaptability and have really thick skin and be hyper focused. So it's really a challenge every day. But to know exactly what you're doing and who you're doing it with, it's great. So I have another great question for you. What role do you think alternative assets will play in protecting and growing wealth if we face economic turbulence?
I think that, there's a group called Tiger 21, and it shows how the wealthy allocate their funds in alternative assets. It's not the 60-40 split that you would think.
Right.
And it shows how the ultra wealthy invest. Alternative assets are really key.
Mm-hmm.
If you're not investing in alternatives, you definitely need to blend that in your portfolio.
Mm-hmm.
It's not correlated to the stock market, and real estate is a tangible asset. So whether it's storage homes, real estate, gold, whatever it is, right? I'm not a crypto person, but I know people who's making some great returns in that as well. That's an alternative, whatever your choice is. But I'm a real estate guy all the way. I definitely would say add some of that into your portfolio.
Absolutely, absolutely. And home ownership is a great um asset to have. And it's very odd to see a lot of people are still renting and they're in their 30s, 40s, 50s, and six, and they're still renting and it's almost like they don't know how to get out of that. So maybe we can talk about that on part two of this podcast, or people can reach out to you for certain coaching as well. And we'll ask at the end how they can get in touch with you. All right, let's talk about this question. I like this one. You successfully scaled across different cities. What's your personal framework for choosing the right markets to enter?
Well, the Southeast was really an easier choice because I have a lot of family down there, and it was an opportunity for us to do what we were doing here in New Jersey on a larger scale. Because most of our rental portfolio started out in our backyard, and then after COVID was when we made the transition. We divested the portfolio here to capture that appreciation that was 30% over list. That's where our market was at with the demand from the New Yorkers transition into New Jersey. So we kind of liquidated that portfolio, took the war chest to the southeast and started building it out there. The decision of that area was because I have family there, and it was just, a no-brainer. I can visit my
Right,
family. We
right.
have resources already down there, people we know, contractors. I used to buy a lot of notes from the bank, so I had a lot of attorneys and resources in that market as well.
Great. And when you say in Southeast, like in what particular region? What in what you said
Alabama,
Florida?
Georgia,
Alabama,
Alabama,
Georgia.
Georgia primarily, yes.
Okay, awesome. Wonderful, wonderful. I love it. That is so great. So it's just knowing where to plant your stake. If you got family there, great. You get the best of both worlds. See your family while you're building your wealth. It's great. Let's talk about generational wealth again and mindset. And I think they go hand in hand. You talk often about the generational wealth. What does that really mean to you? And why is that like you're so passionate about it? And how should everyday investors start thinking about it?
Just legacy, period. I mean,
Mm-hmm.
that's what that means to me, right? What you leave in that person, not what you leave for them. You try to people they see what you do and they kind of gravitate towards that, meaning that when your kids or other family members or people you're trying to inspire to pass your legacy on, is basically what you do every day, and you leave in them something that, like they say, teach a person how to fish, you feed them for life.
Yeah,
Yep, that's kind of the whole point of that. Back to the
absolutely.
mission that we talked about, it's educating people from where we come from, financial literacy.
Absolutely. And it's really interesting to see. And the reason why I got into wealth building is to help get out of this gerbil on a wheel going nowhere fast mentality. You work and then you spend it and you're not getting anywhere. There's no traction there. But also in the real estate investing world and also real estate for commercial or residential, I see a lot of people that are just very focused on that commission. They're focused on being very greedy. How do you dissect yourself from that pact and those type of people in the industry to make sure that you have a more of a holistic approach? You're doing it for financial literacy to help others, coaching, mentoring, and to prove that you can. It's not how you start; it's how you finish. Tell me about that mindset.
I mean, it's really understanding money,
Mm-hmm.
right? Once you understand money, and to me, money is energy. So if you
Mm-hmm.
understand how money works, and you won't be money hungry all the time.
Right,
You know
right,
that giving an impact is the highest part of the pyramid, is the
mm,
impact, right? So we all start off because we don't have wanting those things, and then once you have them, you figure out there's more than that, and you transition to impact. Everybody goes to this stage in their journey. So it's just maturity, I guess. Once they get to the
yeah,
level and understand the money and how it works, then you know
so
things are very
powerful. I totally agree. I totally agree. Awesome. Awesome. All right. From your perspective as a coach and mentor, what's the one mindset shift that separates those who succeed in real estate and those that really fall short or they can't get things to work or they get frustrated? They want to see results now. Um, I would love to know your feedback on that.
Well, just patience and believing yourself, just those
Hmm.
two ingredients there. And really, most people have to see it to believe it to see it type of, you have to reverse that and see that
Hmm.
part. But
Yep.
it's all you, right? So it starts from
Yeah.
your inner. So having that mindset would definitely get you to where you need to go.
Amazing. Looking back at your past deals, what has been the most lucrative one? And it was actually a surprise to you, and you didn't think it was going to pull that much, but it was actually a miracle and a blessing in disguise. I'd love to know about that.
I don't know about a miracle and a blessing in the sky because we structured the deal, to be profitable.
Right.
Um, I never had one where I close and go, oh, I didn't know it's going to be this much money. It's always when you
Right.
evaluate it, you make your money on the buy. But we
Yep.
actually just closed one a month ago. I like to celebrate where we made a nice profit,
Hmm.
850,000 on one deal,
Great.
which is really great, especially
Yeah.
where we are in the marketplace, getting those home runs, so to speak. So
Hmm.
yeah, that's the latest one that comes to mind.
That's amazing. Wonderful, wonderful. All right. Well, in closing, if someone listening today wants to be financially free within the next 5 years through real estate and investing, what's one piece of advice that you would give them?
In the right circle, get in the right circle, get the right
Mm-hmm.
network, start from there.
That's great. That's great. Also, going back to 1998, if you could tell yourself that version of yourself then, what you know now, what would be like the top list of things you would tell yourself then?
Wow, that's a great question. If I can go back to then, before I got started, and ask myself, I don't know. I think it wouldn't change anything the way it went because it kind of made me who I was today. I'm thinking that
Right.
question is how would you look at things differently? I would want to go through the same
Yeah.
struggle and in the same thing that I went through,
Mm-hmm. Mm-hmm.
because it makes you who you are, right? I grew up
Right.
with adversity. That's all I know. Um, it just makes you stronger and take more calculated risk and really, figure it out.
Yeah, that is great. Oh, very powerful. Wow, gave me chills. Wonderful. And finally, I know our audience wants to know where can they connect with you and learn more about NNG Capital Fund and maybe even coaching or classes or courses that you offer.
Yeah, so we don't today we don't really do too much coaching. We do have
Hmm.
a social media platform on Facebook, Instagram, LinkedIn. People can connect with me. I
Hmm.
can, give them information from there. Now all our time is carved out for family and running a business. We used to
Yeah.
do a lot of training and mentoring like years ago, but we took that head off, and now our
Yeah.
impact is with the people at these communities, which our BHAG is to try to get quality affordable housing for 5,000 families. If you are an accredited investor and you're looking to possibly partner with us, you can go to nngcapitalfund.com and schedule a discovery call. I'd like to learn more about your investment journey and what type of assets you invest in.
Amazing, amazing, amazing. I just want to say in closing, this has been such an amazing podcast. And before we sign off, is there anything you want to leave or impress upon our audience before we sign off?
Not much. It's been a plum pleasing pleasure, as they say. Thanks for having me on the platform. It's very great.
Thank you so much. Well, Fuquan, I want to say thank you so much for joining us today and sharing your powerful insights on capital raising, creative deal structuring, and building wealth that lasts for generations. And to my listeners, remember this. I just want you to know that success in real estate isn't just about buying property. It's about building the right relationships, leveraging smart structures, and thinking long term. If today's episode inspired you, don't forget to subscribe, share this with your network, and connect with us directly with the information that was given. And until next time, live in luxury. Thank you so much, Mr. Fucon. Have a great day.
Welcome. Thanks, Jennifer.